This is the Financially Simple Podcast, the show dedicated to destroying the complexities of money for today's small business owner. The content in the show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor or conduct your own due diligence. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor only conducting business in states where it is properly registered or is excluded or exempted from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Here's your host, pizza-loving, certified financial planner, Justin Goodbread.
And welcome back to the Financially Simple Podcast. I'm your host, Justin Goodbread. Today, we're on location again with our dear friend, Michael Crane of the Crane Group. Now, last episode 176, we actually began discussing health insurance. I know. Don't hang up yet. I would probably, if I heard health insurance, probably hit the stop button, run away, go eat a pizza. But we really don't need to do that. We're going to talk today about health insurance for businesses, more group insurances. Like I said last episode, I am not a fan, Michael, of health insurance. I just don't like it. And we talked about that many people don't. In fact, we have Congress who likes to fight about it because no one likes it. And there's really not an easy solution. We probably should not get into our political discussions because I think you and I stand very similar in conversations and we may drive a lot of people crazy with some of our beliefs. We want to talk today about health insurance for business owners, but more specifically, group insurance. So dive us into what is group health insurance?
That's a great question, Justin. And so it's really broken down into two categories. All right. You've got small employers, which we both deal with a lot. And then you have large employers. And in most states, the magic number is 50. So when you have less than 50 employees, you're considered a small group. And when you are a small group, then you have rates that are completely based off of the area you're in. They're not based off of your health. They're not based off whether you have males or females working for you. They're based off of the age and the zip code of the employees that make up your group.
So let me pause right there and let me catch up with you. So for a business owner who has less than 50 employees, I'm assuming including the owner if they're an employee of the company.
That's correct.
Correct? So if they have less than 50 employees, they don't really underwrite, so to speak, the policy on an age or a sex or a health rating. They do it based on the actual demographics of that locale.
That's correct. And there's two types of health insurance plans. In the small employer pool, we see a lot more of what we call fully insured plans. That means every month you pay a premium. All the claims are paid by the insurance company. Now you do have, and we're starting to see more of these self-insured plans for small businesses. Sometimes it's what's called a level funded plan. There's a lot of different types, but basically at the end, what it means is you are not only paying a premium, you're also self-funding some of the claims. And when you do that, then we get back into the situation of medically underwriting a group.
Okay, so let's pause there. We're a small group. We're a small business, less than 50 employees, and we'll stay there until we chase this rabbit for a little bit. And we can use a fully funded plan. Did I hear that correctly?
Yeah, fully funded or fully insured. And that is what you're going to see 90% of groups have. That's when you go out and there's a list of plans to choose from. Every state has different carriers. Some parts of a state, for example, in Middle Tennessee, they might have 5 or 6 companies to choose from. And here in East Tennessee, we have 3 or 4.
So for the fully funded plan, does the employer choose the deductible, the maximum out of pocket, or is that an employee choice?
So it's an employer choice. And depending on the size of your group, most of the time you can pick 2 or 3 plans. You can offer those plans to your employees and then they can choose which one they want to be on. Most employers today are offering one plan, but because we are seeing prices go up, we're starting to see more and more groups offering that second plan.
And they would offer the second plan as a means to help minimize the cost to the employees?
In both situations, sometimes we have employers who have been offering a Cadillac plan for years and years, and the prices are getting so out of control that they can't continue to offer that. But they want to continue to offer a plan to the employees at a low cost. So they may leave that Cadillac plan in place, but then they'll offer another plan that maybe has a little bit less benefit, but the employer's covering more of the cost.
Okay. So in the fully funded plan, are we still dealing with your copay, your deductible, your maximum out of pocket, just like we were in the individual side?
You are. And they break plans down into 4 categories. And a lot of people have probably heard there's bronze plans, silver plans, gold plans, and platinum plans. And just like you would expect, the platinum plan is going to be significantly more expensive than the bronze plan, and the benefit is going to be significantly better.
In last episode, you mentioned, if you haven't heard that, we laid the groundwork last episode about the individual plans and why for some people who maybe cannot qualify or do not have a group plan. But you mentioned we got to HSA that if a plan had a copay, I think it was, right, that it would not be HSA eligible. Are group plans HSA eligible?
There are going to be some plans that will be HSA eligible, and those plans are not going to have copays. Okay. They're typically, depending on what the deductible and what the coinsurance is, those are going to be different. So there are a bunch of different plans with each carrier. For example, I want to say Blue Cross in this area has 7 or 8 different plans that you could choose from as a small employer, and they would all be HSA eligible.
Now, is it wrong? And I'm asking the question, so don't shoot me, folks. I'm just thinking like you think as a business owner. Is it wrong for me to offer myself and my family, as the owner of my company, one plan and then have a different plan in place for the employees?
As long as you're using the proper guidelines, no, it's not wrong. The government's put out 11 different criterias as to what you can use to what they call class-based plans. And a common one is salaried versus hourly employees. Maybe you've got seasonal employees. There's a lot of different ways you can do it, but you can't pick and choose and say, I like Tom and Fred the most, so I'm going to offer them better benefits. There has to be something that what they have is called non-discriminatory plan choices.
Okay, to that same questioning, one of the questions I'm often hear that I tiptoe around because, again, remember, I hated health insurance. It's almost as bad as pineapple and pizza, Michael. It's pretty close, dude. You know my hatred for pineapple and pizza, folks. It's a sin. I really believe that if you put pineapple and pizza, that you might not go to heaven. I'm not exactly sure about that, but health insurance is still there, okay? One of the questions I get when we're talking about health insurance is, Justin, look, I have 2 or 3 people that have been with me for 30 years. I don't want them to have to pay their premium, but those other individuals that have been with me for 5 years or whatever the number is, they need to cover their own coverage. Can a business owner do that legally?
They can, as long as they've got set guidelines in place. And maybe they're going to say, okay, if you've been with me for 10 years or more, we're covering 75% of the premium. But if you've only been with me for 1 year, we're covering 50. You just have to make sure that you are not saying, I'm covering this person and this person alone. It's got to be specific to a group of individuals. And so that can be difficult in some situations because you may have that guy who's a key employee that's only been with you for 2 years and he doesn't fit what those rules are, but you can't just say, hey, I'm going to give this guy something special.
Okay. So in this fully insured plan, I don't know enough about it to know what questions to ask. What questions have I not asked that I need to know about as a business owner?
So what's interesting about group plans, specifically fully insured plans, are every year all of the carriers have to go to each state, the insurance commission department, and they file their rates. And so usually around October, we know what the price is for next year. And so it makes it really simple because no matter who your insurance agent is or if you go direct to the carrier, every business is paying the same price in that area based off of the ages. So if you have a 27-year-old Justin, you're going to pay the same price as I pay for that 27-year-old if we buy the same plan.
Then that leads me to the question that I have to ask. It's not just because you're an agent sitting here. Why in the world would someone not use an insurance agent?
It's a good question, and it's really one of those things where sometimes people have had bad experiences. Sometimes they didn't know where they wanted to go, so they went directly to the carrier's website. Really, you're doing yourself a disservice, and I'm not saying that because I'm an agent. When you deal directly with the carrier, I can guarantee you they're not going to go out and get quotes from Blue Cross or Humana or whoever the other carrier is. You're just going to be given your renewal each year. And so you really want to find someone who is searching all of the plans every year, because there's drastic changes from year to year. There was one year where one of the carriers in Tennessee was 30% more than the other carrier with the same plan. If you were direct with that carrier or with a broker who didn't quote that carrier, you were going to only see one option.
Guys, with that, I'm going to put a little pitch in here, not for Michael, but for insurance agents. Now, you know I like to pick on them. I really do. A lot of them have commission breath. You have not heard that, I hope, from Michael's conversation. He's not that type of individual. But I got to give you an example. So I have a client of mine, Michael, who's a business owner. He's in a different state in the Tennessee, and he pays 100% of the premiums for all of his employees. He has to do that to compete with the various companies and the unions in his particular state. And whenever I looked at his premiums, he was paying in excess of $140,000 a year. For me, that's an astronomical amount of premium dollars for a business that produces roughly about $1.5 million. I mean, we're talking about 10% of the revenue going toward insurance. Of course, I look at it, right? So I called his agent up, and his agent had not looked at the policy in some 6 years. The agent and this business owner had a long-term relationship, as you know how friends are sometimes in business. And we asked the agent to run some scenarios, and he dropped the premium from $120,000 a year, still fully paying the insurance premiums, down to about $30,000 a year. It's a huge, huge savings. So, folks, I'm going to tell you that, and this is not a plug for Michael or anybody else at this point, but I'm going to tell you that you want to talk to your health insurance agent. And that conversation should probably begin about August. Is that about right? Or September? Or?
You want to start at least 3 months out from your renewal. And a good thing I always tell people when we sit down and meet, if all you're seeing every year is your renewal booklet or a spreadsheet with 2 or 3 options on it, you're probably missing a lot of what's out there. Health insurance has changed dramatically, especially in the last couple of years, and there's a lot of different ways to create cost savings depending on your group and your situation.
You're listening to the Financially Simple Podcast. Show your support by subscribing to this and our other educational business channels at financiallysimple.com.
So we've spent some time talking about fully insured plans. The second part of that for small business owners was partially insured. Did I hear that right?
That's right. So there's 2 different ways we can do it. One thing we can do is we can buy a fully insured plan and have what's called a health reimbursement account. We like to use all different types of acronyms and letters and things in insurance, but an HRA, not an HSA, a health reimbursement account will be set up where it can actually reimburse part of the deductible, part of the expenses to the employee. So what that lets you do is maybe you had a $1,000 deductible plan, but you've got a really healthy group. So you might want to say, I want to take the cost savings of jumping up to a $3,000 deductible, and then I'm going to use that HRA, that health reimbursement account, to reimburse the expenses to the employees so the plan looks exactly the same to them, but you're saving that premium. You're not prepaying your health insurance expenses.
So I've spoken about HRAs in detail, maybe not in detail like I'd like to. And it's a strategy that I often use with small business owners who have major expenses in a year. And we'd like to do an HRA, put it in place. We have one particular client that has a special needs son, and their insurance is just astronomical. So we had to go to a high deductible plan. Then we've got to look at it. HRA made more sense. And it allows us to basically write off the medical expenses in that scenario. How often do you see small business owners utilizing HRAs these days?
5 years ago, it was 1 out of 25, maybe. Today, we're putting it on most of our options every year. Not everyone's taking to them, but we've gone from 1 to 25, maybe to 1 in 10.
Wow.
And it's the future of where health insurance is going. The other side of a partially self-funded type of plan that we're seeing more common is what's called a level funded plan. It's a way that a small business can get around some of these rules and regulations of the Affordable Care Act. Because one of the rules of a health insurance plan for a small business is it can't be rated off your health, which for a lot of groups meant they're paying more. On a partially self-funded plan, we now can rate off health. And so if you have a healthier group, then you have the option to say, we're going to help pay part of these claims and we're going to set up our insurance differently. And I've seen savings as much as 35% from one year to the next going to a partially self-funded plan.
Wow. So the partially self-funded levelized payment plan. And I'm ignorant here. This is not my world, okay? So don't laugh at when I say this. You know how we get in the mailbox here in East Tennessee, we have the TVA, Tennessee Valley Authority, which generates the power for us. And sometimes my monthly premiums will be like $200. Next time it'll be like $100. And they give us the option to levelize the payment. Is that what we're talking about here, or did I just make something like total all right?
No, you're not too far off. So what they do is when you first get set up and you get a quote, all your employees are going to fill out health forms, or some carriers today aren't even making you do that. They're doing a prescription check along with a few other things. They're going to estimate what they think your claims are going to be throughout the year. Then they're going to take that, they're going to do their calculations, and they are going to average those claims out. And that is the level premium that you pay every month. At the end of the year, if your claims were less than what they guessed, they're going to reimburse you the difference. If it's more than what you guessed, you are only paying what you paid every month. So it gives you that cap and that protection where you know I'm not going to come up and have to pay this huge bill at the end of the year.
Okay, shifting gears, if I may. We've covered a lot for small business owners, and I'm sure we could spend hours talking about all the different tricks and different paths we could take. Let's just, for the last 5 minutes or so here, talk about big business. And you categorize bigger businesses as those who have employees greater than 50. I know there's a handful of business owners that I already know that listen to the podcast religiously that have that many employees. What are their health insurance options for them at this point?
So when you're over 50, we start getting a lot more regulations on how the plans are set up, what is affordable and what is not. There are a ton of different plan options, and large businesses actually have more options because now we can get back to customizing a plan. We're not just choosing from a list of plans, but we're also getting back to rating groups based off of their health. So that's going to be done a lot of different ways. It depends on the size of your group, but large businesses are usually going to be able to offer 3 or 4 different plans. They just have a lot more options when it comes to sitting down with their broker and designing exactly what they need. And I'll give you a good example. On a small group, I'm going to come to you and I can say there's 133 plans in your area. There is no limit on large group because we can really make it whatever we want it to be within reason.
Can a large group cross state lines for insurance providers?
So when you have multi-state operations, then what you're typically going to do is you're going to make sure whichever carrier they are with has a good network outside of the state. And I'll give one example because it's what everyone seems to know. Blue Cross Blue Shield. Right. In Tennessee, we have Blue Cross Blue Shield of Tennessee. In Kentucky, it's Anthem. But you have a national network with all of those carriers regardless of where you go.
One of the things we've talked about, just kind of alluded to, is the state barriers. We alluded to it in the last episode. We didn't really step on that turtle, so to speak. We just talked about it. I want to step on it, okay? Whenever we're talking about the state barriers and what states are, the fences around these states, I know it applies to individual plans. Is that correct?
Mm-hmm.
Okay. Does it also apply to small business plans?
It does in the fact that every state has a insurance commission's office. And so the insurance commissioner for each state is the one who regulates the plans in their area. And so all of the plans have to be approved through that state office. And so the Kentucky office is going to be different than the Tennessee, which is going to be different than Florida.
We spoke in last episode the fact that if somebody who didn't have insurance, they were trying to gain insurance. What rules are in place for business owners who, let's say, they have an individual policy, or they maybe just had a startup, or any scenario? They want to fire their current agent, et cetera. How can they maybe move, upgrade, shift it? How do they walk through that process, and when should they start it?
So health insurance companies have cracked down into the very small, what they call micro groups. So you have to, in most states with most carriers, have a minimum of 2 employees to offer a group, and that second employee cannot be a spouse. Mm-hmm. So it's really going to require at least 2 people, and then you can get a group plan. In years past, we could do single employee group plans, but those really aren't options anymore.
Right. So if somebody wants to start a small group plan, it's just a matter of contacting the agent. Let's get something going.
That's correct.
Is there a certain time of the year when they aren't eligible? I think you said in the individual level, if they didn't have a triggering event was the term I think you used. Mm-hmm. If they didn't have a triggering event, they had to wait till January. Do you have the same restrictions in the business plans?
You don't. You can really start a business plan up at any time. But what the carriers have done is they realized that people were trying to get around the fact that they needed health insurance, and so let's start a business plan. So when you start one up, it's kind of like taxes. They're going to ask you for copies of your LLC agreement, copies of payroll. They're going to make you put together a box to prove that you actually are a small business.
Wow. Now you see why I don't like health insurance. I'm glad there's people like Michael around who can deal with this. And there's a ton of agents out there who deal with it, although there's not that many anymore. Seems like I've seen a contraction of insurance agents in the health market.
Health insurance brokers have really disappeared. And one of the reasons is on individual plans, 90% of the carriers don't pay a commission.
Oh, wow.
So that has really disincentivized people because most people don't want to work for free.
Yes. So do you see any individuals coming into place that are maybe doing like fee advice for health insurance?
It's becoming more and more common, and I think that's what we're going to see going forward, especially with a lot of the legislation that's coming out. I think that's eventually going to be one of the things that's going to be more and more highlighted is how brokers are paid and what they're paid.
Now, you and I could spend hours solving the problems of Washington. We could. Let's not do that. Well, let me ask you this question. If you could make one snap of a finger, and then we're going to be done, one snap of a finger on how to, quote, fix what you see in health insurance that you deal with on a daily basis, just one thing, what would you do?
I would make prices transparent. There's the technology today so that we can know what we're paying at the point of service. But for most people, they have no idea. And the insurance companies have done their best to make that difficult to find out. So if we all knew what we were actually paying, I think we would be more cautious in how we use our health insurance.
So we have a congressman who listens to this podcast. He let me know about it. So, sir, I want you to listen to what he just said. We're looking for transparency and prices. You heard it from one of the experts here in your community. And with that, folks, Michael, thanks, man. Thanks for joining us for 2 episodes. That's pretty awesome. I appreciate your time here. Let me ask you, anything we need to cover that we haven't covered thus far?
No, I think we got a lot here, and it's a great spot to start for any businesses that have questions on their health insurance.
Well, folks, you've been listening to Michael Crane. As you know, he's a friend of mine for many years now. He's an expert. He's one of those individuals. I mean, anybody who can deal with health insurance in the first place is automatically a champion in my book. But not just that. Michael's a great guy. I've known him, like I said, for years. His family is awesome. He's a father, business owner, just like I am. A sportsman. He's a gardener. Man, he's got an unbelievable vegetable garden. How's the garden this year, by the way? Is it rocking?
It's gone pretty well. We've had a few issues here and there. Yeah. No pineapples in there, but I do like pineapple on my pizza.
You need Jesus. We're praying for you. And with that, guys, check out Michael's website, The Crane, CRAIN Group, GROUP Group, The Crane Group. You can learn all about Michael there. And we will have you back on the podcast, sir, and in the near future, talk about some more of these things in detail as we wrap up this particular season. Hey, if you think of a question you want to ask Michael, drop it to me on Facebook, Twitter, LinkedIn, YouTube, anywhere, and we will make sure Michael gets an answer to you on that. With that, check out Michael's podcast. I'm going to leave you with a quote I say every week. Life is hard. It is. Life is good and life can be frustrating. Money doesn't have to be. Let's continue to make our lives at least financially simple. Y'all go out and make it a great day.
You've been listening to the Financially Simple Podcast. For more business and personal financial help and information, head over to financiallysimple.com today.